Welcome back, everybody. It's Tuesday, and this is Benzinga Live. Today, we're going to be talking about Coinbase into earnings. We are going to be talking about the CPI print tomorrow, previewing that, how we're trading that. We've got David Green hanging out in the background. We're going to be doing some live trading, so if you've got any tickers you're looking at, any charts you want to check out, make sure to drop them in the chat because I'm bringing on my man David Green. If this is your first time hanging out with us on a Tuesday, David's the man. I'll let him give a little introduction, but he was on... He was on Wall Street for a couple years, I think 3 or 4, made some money, so now he's just hanging out down in Florida, but he's kind enough to give us some of his time on Tuesdays to trade with us, runs his own room. So again, if this is your first time with David, I'll let him give his introduction, but let's go ahead and roll that intro, get the show started, and we'll bring David on.
This is Benzinga Live, Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a breaking news.
What up, Chase? What up, Nicholas? What up, Lord Byron? Risk it for the biscuit, saying Bed Bath & Beyond, AMC, GME, let them rip. I'm sure David will, we can check out some of those with David, but without further ado, let's go ahead and bring my man on the stream. DG, how you doing today?
Good morning, Aaron. Good morning, Benzinga. What's up, ladies and germs? Aaron, if you can put up the comments. I can't see them yet.
Of course. While I'm doing that, why don't you give your brief introduction for those of us who are new with us today? Like I said, you were on Wall Street for what, 2-3 years?
15.
Okay.
I started working down there in 1985, and then I was a specialist broker on a Florida exchange, and I retired at the end of 1999 when Goldman Sachs bought our firm for $6.5 billion. Been trading for my own account ever since. Started our trading school about 5 years ago now. Been teaching people how to trade for the last 10 years or so. We have courses that we offer. I have a live trading room where I trade live every single day with all of my traders, post every single trade that we're doing before we get in them, stop orders, profit targets, and we are big on technical analysis. That is our main focus, is technical analysis. What's up, MD? What's up, everybody else?
See, Falcon. Eric Scott saying, good afternoon. Eric, where are you joining us from? Are you somewhere across the pond over there in Europe? It's only 11:35 here on the eastern seaboard. Jinx, you owe me a house.
All right, guys, I'll start off with the overall market.
All right, let's do it.
Let's start off with the overall market. And I want to show you in the SPY what we were looking at the last few days and why I was a little bit disappointed, to say the least. But we're kind of hanging in. We'll see what happens. Here's our daily chart of the SPY. Okay, I want to show you this. And if you guys remember, our moving average is going strength of order from our 9 through our 200 EMA. And when we see something on a daily, weekly, or monthly level, it's usually going to be a big level of support or a big level of resistance. And if you look at my chart, guys, and you look yesterday, right? We made a high of 417.62 yesterday. And our 200 EMA was right around 417.50. So this is a daily chart. You know, we had a nice 5, 6, 7, 8 day run up. We could not get above that 417.60. I'm going to show you a weekly chart. Basically the same thing. I'm going to show you a monthly chart. Same exact thing. So when I see levels like that lining up on a daily and a weekly and a monthly, that's telling me that that is a huge level. And we couldn't get above it. Not the first time up there. So kind of set up for a short sale up there once we saw we couldn't get above it. You know, now we're down back around 911. You know, we'll look for some bigger support here. First real support we have is 409.50. And if we can hold 409.50, then maybe we're setting up for this trend on a daily chart. We break that, we go down to like 405. So my first spot that I'm going to be looking for any kind of importance is right around, let's just call it 409.50. That would be the first spot where I would look for, and then we get 405 and a bunch of stuff below that. So technically speaking, we rallied up to an exact spot of resistance. Today, we got down at this 410.45, and we were looking at that 409.50 level to make a little trade and get long. We'll see if that happens a little bit later in the day. So that's my take on the overall market. We need to get back above that 418 level, because above that we don't have much. If we go to a monthly chart, that can reverse this whole downtrend that we've been in since we made highs. That's why it was such a hard level to get above. So we'll see what happens in the coming days and weeks. That's the spot we need to get back above. There's still so much going on. Tomorrow we got the big PCI, right? Or CPI or whatever the hell it is, Aaron. What is it tomorrow?
We got CPI tomorrow. So yeah, let's talk about that real quick for a second, David.
Sure.
So July's CPI, that's what we're getting tomorrow. So June's came in at 9.1%, which was a little higher than expectations. Tomorrow's number that for the street expectations, I believe, are set at 8.7%. So the inflation number is expected to come down a little bit. Now I think we're not really going to see a super positive reaction for the market unless that number is significantly lower than that 8.7%, because the expectation is already that it's going to come down, that it's going to get better. So now that expectation's baked in, it needs to show that, oh, okay, we're beating that by a significant amount. And even if and when that happens, the Fed will most likely come out and say, hey, we're still going to be data dependent. Seeing 8.4% isn't giving us enough conviction that inflation's really dead, even though it's a little bit lower than expected. So I would expect the Fed to come out and kind of reaffirm what they've been saying. We're going to be data dependent. One month-over-month lower CPI print isn't enough to give us conviction that we can pivot on rates or anything like that. So, again, I'm foreseeing a market rip if it's a significant beat. If it's just in line, forget about it. Probably flat, if not lower.
Okay, and short. All right, that ship has sailed. Then it's 11:28. It happened a little bit ago. All right, so here's my take. I would think it's going to be lower, right? I mean, the last CPI had oil in it when oil was much higher than where we are now, right?
Yeah.
Oil's gone down to almost 20% in the last month or so since we had this little order. So I'd expect it to be a little better. I think if they come out, if this happens, and to me, if they're a little dovish and just say that more data dependent, that's positive to me. I would think that would help the market.
Yeah, especially if the data coming out is starting to get
better,
not bullish, but better. Right, exactly, better. Or you got to remember everything's relative in the markets, and so if the inflation, it's still going to be high, still going to be great. Trust me, or not going to be great. Trust me, I'm not stoked about paying $4 a gallon for gas still. But if it's 4 versus 5.20, I'll take 4 all day. Yeah,
I'm with you too. We just need a little improvement, I think. And again, we're going to be reactive rather than proactive. We're traders. So whatever the number is, we'll trade off of. We need to start seeing some improvement. And I think if we start seeing some improvement, we'll be okay. And maybe we can get going a little bit. We'll see what happens. We still got Russia going on. We got there's other things going on. We're through earnings, right? And I don't know what the stats are, Aaron, but I think more companies beat that didn't. Maybe you have the exact stats. I don't know.
Yeah, FactSet does a good job tracking that. Let me try to find. I know I saw a number from them last week, so let me try to see if I can find one that's
fine.
Updated with the most recent.
Yeah, EP. All right. So if they're doing it excluding energy and food, then who knows what the heck it's going to come in at. It takes months for interest rate hikes to get through to the economy and have that start working. It's not something that happens overnight, right? It usually takes at least 6 months. So we'll see what happens. Look, people are all over the board. I have people calling for rate cuts next year. So who knows? Again, long term, guys. When anything bad happens, you just buy and put it away. If you're a trader, we just react to whatever the numbers are. Richard Judge, CPI going to tell Peter Tuchman I said hi. You got it, Judge. Me and Peter are partners on a Wall Street Global Trading Academy and a bunch of other stuff. But good to see you.
Okay, so this was from August 5th. 70% of S&P companies have beaten revenue estimates to date for Q2 2022, which is actually the lowest percentage since Q2 2020. So 70% of companies are beating, which is still a little bit lower, but this is also coming from FactSec because we've talked about this too before, David. It doesn't really matter at the end of the day what the numbers are. It matters how the market reacts to it. So 70% of S&P companies have beaten. But this, to me, is the more key part. The market is rewarding positive EPS surprises more than average and punishing negative EPS surprises less than average for S&P companies for Q2.
That's good. That's a positive, right?
So companies that are reporting bad reports are going down less than average. So if, for example, if Microsoft reports a bad earning and typically they'd go down 10%, right now in this current market environment, maybe it's only going to go down 5%. Which is what's that showing you, David? What does that mean to you?
Well, it means to me that a lot of the bad stuff is probably getting priced into the market. That's what it means to me. Wall Street is always forward looking. It doesn't matter. None of earnings even matter. The forward guidance is what's important. But to me, that's a positive thing. If the good ones are being rewarded and the bad ones aren't being punished as badly, that's a positive thing to me. Look, we all know, guys, in time, this is going to be all right. All this is going to pass. It's going to take and I said at the beginning of this year when they started, it's going to take a lot longer this time. This isn't, the pandemic when we were in the middle of it. I said we'd make new highs that year. And we did. This is different. It's going to take a while for all this to work through and really cut down inflation. It's just going to take a lot longer. Thoughts on the video? Let's talk about coin. We got earnings tonight in coin, right?
Yep.
Got earnings tonight in coin. All right, guys. We have an order out in NVIDIA to buy on this pivot point. I'm going to give it a couple more minutes. I don't like how slow it's going, but let's see what happens. You guys can see we have an order out to buy some NVIDIA on our pivot point. We'll give it a couple more minutes, see what happens. I think Kathy Wood bought 35,000 shares of NVIDIA either yesterday or when the announcement came out. 60 million bucks worth. There you go. Yeah, she bought 60 million bucks worth. I guess it was yesterday that she bought it. And I think she got out of a whole coin position, didn't she? I know she sort of sold a bunch of it in the 60s.
I don't know. I haven't seen. No,
she did a week or two ago. She sold.
Oh, you're right. I know she had sold a bunch of it. I didn't know if she had gotten completely out of it. I did see an article.
Yeah, I'm not sure if she's completely out of it, but I think her price was. What was her average? 220, 230, something like that?
Yeah, that was what the article was saying. She had started buying it in like the 200s, sold at 50 or something. As soon as she sold, it started shooting up.
Well, she's like the Kramer inverse ETF now.
I don't know if I've ever seen it. Maybe you have, David, with being in the markets and in the investing world for a couple years longer than me. But I don't know if I've ever seen someone be like go from a public sentiment standpoint, go from being so lauded, so everyone was looking up to her, thought she was the best, to everyone making fun of her now.
Yeah, well, what the bottom line is, you're only as good as your last trade. That's it.
Yeah. Well, maybe Bernie Madoff, because everyone thought he was the best, and then he
never made a trade.
I know. I was listening to a good podcast where they were breaking down the whole thing, and they were talking about how people were looking at his returns and how good they were, saying he's got to be insider trading. So they did all these investigations trying to find insider trading. They couldn't find anything because he wasn't trading at all.
Yeah, exactly.
There was no insider trading.
I mean, he had the SEC in his office like 1,000 times over the course of years. There was nothing to look at.
And they talked about that too. And they talk about how most of the SEC investigators and stuff are like former lawyers, maybe some state prosecutors, and they're not really finance guys or traders. So you get him in a room with a guy like Madoff, and he starts talking about how he's moving money from this vehicle to this vehicle to this future to that, and they have no clue what he's talking about. So they're like, all right, yeah, that sounds legit.
Yeah, it sounds legit to me.
Sounds legit to me.
And post those things as soon as you get them for us, please. Okay?
Yeah, Lord Byron, I really do think that's like a lot of what it is. Maybe she just got lucky on Tesla investing early and got a lot of clout from that, got a lot of credibility.
That's exactly right.
And then you got to think about from, COVID 2020 to February 2021 when ARK was at its highs, like that whole environment was just ripe for growth stocks. So she got, a lot of those tailwinds. And then,
yeah, I mean, here it is, whatever this was, whenever the pandemic was. I don't know. It was back here, I think, right? March of 20. Is that right? Yeah, I think it was
Yeah,
March of 20. So the fund was
right.
trading for $44. It went to $159 because stocks like Zoom and all those kind of stocks that you
Roku, Coinbase. I mean, Roku might have been the best performer in that time frame from March 2020 to when
Take a look.
ARK was at its highs. I mean, that thing went from
Yeah, it went to $500
from what in March 2020? 80?
80.
Yeah, I mean that's 1,000% return.
Yep.
I mean,
Yeah,
crazy.
Look what Zoom did. Zoom did the same exact thing, right?
Yeah, you're right.
Zoom,
You're right.
I mean, the same thing. March of 2020, this thing was $89. It went to $600.
Yeah.
So,
And I know, Shelly, everyone famous experiences that, you know, people love them and people are mad at that, you know, whatever. But I'm saying going from like I remember when we had Kathy Wood on the Benzinga channel, we had like 20,000 people watching live or something. It was crazy. Like everyone loved, and then, you know, she became Kramer like overnight. I'm just saying, I don't know if I'd seen that drastic of one, at least in the markets, that quickly.
there's guys that have made one good trade in their life and they're still living off of it, right? So
Michael Burry.
that's who I was going to say. I mean, really, you know, he called the Big Short, and I don't know if he's been right since then. But
I know he's been like he's been bearish. He was short in Tesla. I think he's made a few good trades since then, but
you know the bottom line is, especially for people who are just joining us and just listening to this, don't listen to anyone, guys and girls, please. Even on a daily basis, don't get caught in all this FOMO stuff. Don't listen to the chat boards and all that stuff. You're going to lose money 90% of the time when you start following these things, right? We had a case today, okay? And I see this every day, Aaron, in multiple stocks, right? This was all over the chat boards this morning, the Verna, whatever it was. They had some kind of new drug or whatever. I mean, they buy it up to $15, and now it's trading at 10. And I see 5 or 10 of these things every single day. And the uneducated and most people who don't know, they're going to get their accounts blown up in this thing. I can't think of a better example than HKD. This is the craziest one I've ever seen in my 30 years of trading, right? This HKD came out at $12, right? It was an IPO. It was like a $12 or $13. Guys, people bought this stock up to $2,500, okay? $2,500. Are you kidding me? Now it's down to $240. I wouldn't buy this thing unless it went back to 10. But people actually paid this price for this stock. It's down 2,300 points in 5 days. Stuff like this is an accident waiting to happen. So my strong advice is get yourself a nice, good, long-term financial advisor. And if you are trading the markets like we do every single day, you just avoid those stocks. Don't even go near them. It's not worth being involved in them unless you're a savvy trader and you're taking your money in and out of those things. That's what we do. Okay. We find spots to buy or short these stocks and we trade them. That's it. That's what we do. Period. Aaron is your financial advisor. Aaron, are you a registered financial rep?
No, but no. Shelly's kidding, and I'm not gonna kid about that. No.
Guys, even in our live trading room, right? Everybody pushes their own buttons. I post every single trade. I'm trading in a real trading account, but everybody pushes their own buttons. You know, I don't tell people exactly where to buy or sell a stock. I make recommended things based on our technical analysis. You can't tell people where to buy and sell stocks, and 90% of those people you don't want to be listening to. That's the bottom line. Period.
Yeah, I agree with Richard. That is excellent advice, and you got to figure out too. You know, especially if you're newer or new with us today, you got to figure out like exactly what your goals are. For some people, maybe it makes more sense to invest. You know, maybe you don't spend any time trading. You just invest in into the total stock market every 2 weeks with your paycheck, or maybe you know you've got time and you want to learn how to trade on the side. And great, you know. So I think it's about determining what your goals are, figuring that out, and then learning from the people that will help you achieve those goals. Because for some people, it is probably easier to, I'm not saying we were talking about Kathy Wood earlier, but find people like that run funds and stuff and say, hey, I'm just going to invest my money with them instead of trying to trade on my own. That works for some people. Other people want to do it on their own.
100% right. Guys, did anyone get into the video here at 168.80? Guys, if you did, keep a very tight stop. I'm not crazy about this market. There's no volume in anything. This market's just dead. But this is a setup, guys. We're watching. We had 5 red bars in a row. We hit our pivot point at 168.80. So let's see what we do from here, guys.
Yeah, NVIDIA to me is it's really interesting because I mean I think we've talked about this, David. Like long term, I think we both love this stock. I saw that headline hit yesterday before the market. People on the show were, asking me about it, like, oh, NVIDIA's down 8% today. Should I buy it? And I was like, no. Like, if anything, I'm bearish on this thing in the short term, right? They're coming out saying gaming, hasn't been as hot, whatever. Like, it's like, I'd rather wait and then to see when we do bottom out and start to come back up. But I wouldn't be surprised to see NVIDIA even from here continue dropping before we start coming back up.
I agree. I think that, you might need another quarter in this thing before it starts to get any serious action on the upside. But here, guys, I want to show you how we just took 50 cents out of this trade. And this is what we do all day long, guys and girls. We bought the stock at 168.80. It just went up to 169.30. We took 50 cents out of the trade. It took about a minute for us to get that trade. So, I have people in my room that are trading 100 shares. Okay, they make $50. And I have people in my room that are trading 2,000, 3,000, 4,000 shares every time they do a trade. So if you did 1,000 shares, you just made $500. It took what? I don't know, a minute. But this is technical analysis. Okay, stock went down 3 points. We're going to get a bounce. The odds are in our favor of getting a bounce by using our technical analysis. And you can see that stock just worked. Got 50 cents. That's all we care about. We're on to the next trade. I don't care what the stock does next. And this is what we try to do all day. Just catch short-term gains in different stocks based on our technical analysis. Let's talk about coin for a couple minutes because I know the earnings are coming out tonight. But let's go back to NVIDIA first, okay? This could take another quarter before you can see anything that substantial back to the upside because they already came out and warned. It broke every single level that we have technically on every one of our charts. It broke our daily. Okay, so my next spot on a weekly is down at that 145 level. All right, and then monthly 125. Look, if they come out now and they punish it when the earnings actually come out, that's probably the right time to buy it because they've already warned, right? So that might be a good time to buy it after they come out. And if people react negatively to that, I'd be more apt to buy a little, especially if it got down around that 145 level. All right, let's go to coin for a couple minutes. So we've had a huge move off the lows in coin, right? Go to the daily. And we had that huge move because they're partnering with BlackRock. I think that's what it was.
Yep.
You probably know more about it than I do, but they're partnering with BlackRock so that people in BlackRock can use their platform or whatever it was. And that's why we went in 2 days from 60 to 116. So the expected move tonight is $15 in coin. So yeah, it's huge. That's why it went up. I mean, the stock went up 80% off that BlackRock news. So yeah, I mean, we went from the stock went up, 100% from 60 to 120. So we're expecting a $15 move. Okay, so I'll go right to my daily, and I'll try to pick something around $15. So here we go. Our daily 30 EMA is around $70. That's the first spot. I might take a look later on tonight. Weekly is about this lower than that, and then monthly we're back down. So look, to me, if I'm watching tonight, I'd start looking around $70 to see if it sets up for a trade on the downside, and then if it goes up $20, we'll start looking on the long side. We'll see what happens. I don't think their earnings are going to justify the stock having gone from 50 to 120. I don't see that as happening.
Yeah, and what I had noticed, I've been watching Coinbase, and when we got a couple weeks ago, when we were trading right around $50, there were right around where Kathy sold. There were a few days where Bitcoin itself, and obviously Coinbase and Bitcoin trade pretty similarly. There are days, if Bitcoin's up 3%, usually Coinbase is up, usually a little bit more than that actually. But there were days where Bitcoin was down a lot, where Coinbase actually, the stock wasn't dropping. And that to me was a sign. I was like, all right, this is where I would usually expect to see Coinbase down another 5-6%, but it was hanging out right there at the $50 level. And that really got me interested in it. And then you could see, you know, from there, we kind of catapulted up from $50 to, I mean, I think we got above 100. We might be below there now, but I think we peaked above 100.
116. We actually
116.
116, yeah. I got stopped out of coin today. All right, listen. It's another thing, guys. If you're a trader, you're going to get stopped out of trade sometimes. That's the cost of doing business. Just because you have a bad trade doesn't mean you're a bad trader. We got stopped out of 2 trades today. It happens. And then you just be patient, you be disciplined, and you wait for the next setup to happen. So, you know, look at the video that we just did, guys. We took 50 cents out of the trade, okay? It just went down $1 from where we took our profit. That's why it's called trading, right? And a lot of traders, they'll get in a stock, they don't take their profit, and then they'll end up losing money on it. That is not something we will ever do, okay? Ever, ever, ever. But Sawyer, you know, if you have a game plan and you're using technical analysis and money management, getting stopped out of a trade isn't the worst thing in the world, okay? As a matter of fact, it's fine. Guardian Galaxy Funds got stopped out in the video. Well, again, guys, you're talking about the trade we just did. We took 50 cents out of the trade. We didn't get stopped out on anything. Go ahead, Aaron. I'm sorry.
I was going to say, if you don't mind, can we look at NVIDIA on like a weekly chart? I'm curious, like it seems for a while, I thought there was never a chance we were going to go back and like test the maybe pre-COVID level. I think split adjusted, it's like $60. Like what would it take for us to get back down there, like to the pre-COVID levels or you know, to give up some of these gains, or maybe a monthly trade? Yeah, it would be better.
Well, 124 is monthly. And then here you go. You want to go down to the 200 monthly? That's $59.
Okay.
I mean, look, that's the technicals, right? So our first spot, and again, I'm interested down at this 144 level, probably. You know, that would be a double bottom on a weekly basis, right? I think we get a bounce in it. But again, I can only go by my technicals. So it's 144, and then for me, it's 124. Let's put it this way, guys and girls. If NVIDIA ever goes down to $59, we're going to have a lot bigger problems than worrying about NVIDIA being at $59.
Ain't that the truth?
Right now, because the market will be in a whole lot of trouble if that happens, right? Without a doubt. All right, we got any other questions, Adam? Any other stocks anyone wants to talk about? Oh, Mark, let me just check the spiders real quick. I think we're hitting. Spiders are fine. It's just the chips that are so weak today, right? NVIDIA keeps making new lows. AMD keeps making new lows. Here's a good example today of a beautiful short that's set up. Check this out, guys. Look at UPST. They had earnings today. Okay? And it doesn't matter whether the earnings were better or expected or not. But this stock went from $28 exactly. Check this out, guys. Exactly to our pivot point at $33.20. Look what happened when it hit there, guys. Everybody see this chart? Unbelievable. We went from $33, a huge resistance level. The stock went down $4.50 from there. There you go. So again, technicals. If you're a trader. What I'll do for everybody, guys, is if you want, which we do every week, before we leave, Alex will put my email up there. We got a lot of exciting things going on, Alex. Let me talk about them for a minute, okay? And then we'll get to some questions. You know, we have our course that we offer on Wall Street Global Trading Academy. What we're doing now is we're doing master classes, Aaron. And what we're doing is I'm doing like a Monday night for an hour or so, a Tuesday night for an hour or so, and then live trading on Wednesdays and Thursdays in the room. And we're going to make it like $49 or $50 for people who don't have a lot of experience and stuff. We'll talk about it next time because we're just getting it set up. But really, 4 days you get to spend for like $50, but we'll talk about that later. For now, guys, dgreen927@yahoo.com. Anyone send me a email, and you can come hang out with us in the trading room for the next 5 days.
Beautiful. All right, one more before you go. We got someone asking about Roblox. Have we checked that out today?
Sure. All right, so I'm always going to go to a daily chart, get a little bigger picture. This one actually looks much, much better than it has, right? Earnings are coming out tomorrow in Roblex. Okay, so I mean, it's been in a nice uptrend since $38. Again, not a big mover. You know, we're in the middle now. If we can break above this 51.10, that would be very nice on a daily. And you got enough resistance at 53, resistance at 67. So it's looking better. I don't know what the expected move is. Big support would be down around $40. So there you go. It's looking better. If the earnings come out good, it should continue this uptrend. We'll see. One thing I would do, and I saw someone posting this early today, if you're in Roblex already for a long-term trade, that's great. All right, hang out. You buy on cheapness if you believe in the company. If you're looking to do something tonight based on the earnings, I would never buy or short the stock. I saw someone put up a short coin going into earnings. That's not something that we would ever do, because that's just 100% gambling, right? And again, and Roblex is pricing in an $8 move, so there you go. If anyone's ever thinking about that, we have an options expert in my room. He can give you straddles and all sorts of stuff that you can do with low risk. But I would never, ever, ever buy a stock into earnings or short a stock into earnings. You're just purely gambling. And the whole thing about trading and what we do, guys, is we're not gambling. Everything is based on odds. We don't make trades until the odds are in our favor of those trades working. And sometimes they don't work, and that's when you have stop orders. It's all about trade management and money management.
Yeah. All right, David. Well, it's always a pleasure to get you on, man. You got that email in the chat, dgreen927@yahoo.com. David, have a great rest of your week, man. Looking forward to chat next week.
Always great to be here. Thank you, Aaron. Have a great day.
You do the same. All right, folks, that was David Green. Go ahead and shoot him an email, dgreen927@yahoo.com, or go to wallstreetglobaltradingacademy.com. I believe that's just wsgta.com. I'll drop that link in the chat as well, or for now, just shoot him an email. But all right, folks, so we talked about Coinbase with Dave. We talked a little bit about CPI, but let's talk a little bit more about that now. I'm going to go ahead and pull up our CME watch tool. And remember, we don't have an August FOMC meeting. There's a Jackson Hole event coming up in a week or two. I don't know. We actually have a Benzinga employee out in Jackson Hole. We might have to send her to the Fed meeting, do some live reporting from there. Pretty steady on the probabilities. So this is probabilities for the September 2020 or the September 21 Fed meeting. They're currently pricing in a 75 basis point hike, given a 30% chance for a 50 basis point hike. I would expect that number, this one on the left, this 32%, to jump up tomorrow if we get a CPI number well below the estimates. Again, that CPI estimate for tomorrow is 8.7% year over year, meaning that the consumer price index, essentially taking a basket of goods that people pay for. So, they go out and do polling and ask people, hey, how much did you pay for a carton of eggs this week? Oh, $2.50. Well, last week it was $2.20. Now we know that the carton of eggs has gone up 30 cents in the last month. Who's looking for me? So, do you hear the cops? Now you're scared me, MD. The feds? But anyway, now you made me lose my train of thought, MD. Essentially, 32% here. I wouldn't expect to see this climb again unless we get a significant beat on the CPI. Someone made a good point earlier that the core CPI, they will take out energy and food prices because those two groups of goods just are more volatile than the average, so they can oftentimes not be a great reading of inflation. I mean, take into account something like the Ukraine-Russia war, right? We had a lot of inflation going into that, but say we had normal inflation 2% and something like that happened and gas prices went up really high for 3 months, like that wouldn't really be a great reading of inflation because at the end of the day, your dollar is still worth the same. It's just this one good, gas is more expensive. So that's why they take certain things like that out of the CPI. I do think there are things within the core CPI outside of energy and food that have been also continuing to fall. I mean, we've been seeing that actually for the past few months, namely electronics like TVs, smartphones, things like that got overproduced during COVID. And now as we're getting out of COVID and people are traveling more, people are working from home less, there's less demand for a lot of these electronics, and you just have normal consumer behavior. I mean, think about it. If you bought a brand new flat screen TV in 2020 during COVID because you were going to be home a lot more, chances are, I'd venture to say, you're probably not looking for an upgrade already, right? If you bought a brand new TV in 2020, I'd be curious. I mean, I'd assume most people aren't already looking to upgrade that. So, you have prices in electronics like that. You have furniture. You have different home goods falling. The expectation's already out there for the CPI number to be lower tomorrow. The question will be, how much lower? How much lower? Because if it's 8.6% versus the 8.7% expectations, we're only beating by 0.1%. I don't think that's going to be enough to move the market. I don't think that's going to be enough for the market to say, oh, the Fed might be able to get dovish here, we're going to rip. No. If it comes in at like 7.5%, like a full percent below those expectations, then you might see this number here on the CME Watch Tool page change. Then you might see, the S&P 500 or the Nasdaq or the Qs up 2% tomorrow, because then that significant beat would show Wall Street and show investors, hey, hey, this is real. Like this inflation's coming down and it's coming down quickly. We're seeing the bullwhip effect, not just, hey, we got 1 month of lower month over month. CPI or 1 year over year CPI was lower month after month. And I mean, we already got that. I believe it was May's CPI came in lower than expected. And then people thought, or not lower than expected, but came in lower than the month before. Maybe it was June. And then people thought, okay, maybe we might get 2 consecutive months of lower CPI and give us some, confidence that inflation is dropping, but that isn't what happened. We got 1 month lower and the next month went higher again. So last month was higher than the month before. This month would be the first month, starting a new streak of lower month over month inflation. If we get that a couple times in a row, if we get that July's CPI in 2022, is lower than 8.7%, and the next month is lower than whatever we get tomorrow, then that will be more confidence for the Fed that they can start reducing these rates. Aristox Market is saying, are wages included in the CPI? No. So wages are included last week when we got the non-farm payroll numbers, which came in much higher than expected, signaling a strong economy. Wage growth is part of that report, and the wage growth did show that it was growing. So that's why actually, the markets were moving lower on Friday, at least in the morning, were because economists were seeing exactly what you said, that wages were going higher, saying, okay, inflation's not coming down because wages are going higher. I don't think the wages really grew by like that much. So I think there probably is an economic scenario where wages slightly increase and prices of goods continue to fall. Basically, whatever the opposite of a perfect storm would be, a real perfect condition, perfect scenario for consumers. If wages are growing and prices are falling, it typically won't happen. I mean, I don't know. I'd assume it's possible to see it in like a month, probably not over time. But yeah, so wages are not included in CPI. The CPI is comprised of the price of the average price of different goods that people are paying for. So let's do this. Let's go to the CPI from the BLS, and we can kind of break it down a little bit, because you do see so yeah, I mean, and this is where you're seeing here, like energy making up 41% of the inflation we're seeing right now. So as we've seen, gasoline prices drop every day for the last 50 days in a row, we are expected to see that CPI number come down. Like someone said in the chat, core CPI will exclude that energy. And all right, let's do it here. Let's go to Handbook of Methods. I want to know, where's the table of the different goods? that they do. CPI. All right, let's go back home. Oh, I clicked on a new page, but then my screen share was still showing the old one. Sorry about that. Again. It's annoying. Here we go. So, consumer price index for all urban consumers, 12-month percent change. This is looking at June last month to June from 2021. And you can see just how much, fuel is making up, 70% increase in price for fuel. So you take something like that, even if fuel's not going to make up like a majority of the CPI, but just that outlier is showing that, okay, this good is that much more expensive. And then you have some goods getting less expensive. Education and communication commodities. It looks like we did see, some other household furniture, starting to get more expensive because on previous CPI reports, we actually saw these getting cheaper as well. So yeah, I'm curious for tomorrow's. Like, I think tomorrow's will be pretty telling. I mean, the expectation, like I said with David, is already that number's coming lower. So with that, the bar's kind of set. The bar's not super high in terms of expectations because we've already had such runaway bad inflation that, we're seeing that essentially that basically any type of, all right, as long as we're not, seeing inflation increase, that's good news. So in that sense, the bar is relatively moderate, I would say. But I would say the bar is already kind of raised just because we've gotten all this data of gas prices coming down every day for the past 50 days. Food prices now coming down at food prices fastest paced since '08. Food prices right now are dropping at the fastest rate since October 2008. So I think people are seeing that data out there and maybe getting ahead of themselves saying, okay, we've beaten inflation. Pulling up our little map here, we do think we will see below $4 gas on average in the U.S. here in the next couple days, currently at $4.03, according to AAA. I don't know if anyone's got different live data out there. Maybe we're already ticking below that $4, as Nicholas is pointing out in the chat. Yeah, I agree, Ninja. It's weird. Yeah, yesterday on the way to work, I filled up at 4:30. And then I click here and it says the Michigan average is $4. And I'm like, what am I doing wrong? And I'm down here, I guess in Oakland, but even then it says the average is 408 and I paid 430. I might need to get a new gas station, guys. Mine's just ripping me off. Go to Costco. I don't have a Costco membership. Ain't nobody got $50 a year. All right, guys, let me know in the chat what stocks you guys are watching. Let's go pull up my Benzinga Pro. Let's check out some headlines. Let's pull up some charts. Oh my God, I almost just screwed up big time, guys. I almost went to Benzinga Pro in the window of our streaming service, which would have ended the show. That would have been bad. I know it wouldn't have actually. I still would have been on the screen too. I just wouldn't have been able to control off my computer. 480 Sacramento gas. I mean, shit. At least you're under $5 in California. That's pretty good. I've heard a lot of Californians still paying over. All right, OP. If I said I don't have $50 to buy a Costco membership, what makes you think I can buy a Tesla? Riddle me that. 435 in Pittsburgh. Your thoughts on leveraged funds like bulls? Well, just Drew's in. I'm glad you're asking about leveraged funds. Why? Because in about 25 minutes here, Dave Matza, the head of product from Direction, is going to come on the show. Direction does a lot of the leveraged ETFs that you'll see out there. Not Bull Z, but some of these other ones we will talk about with David. But leveraged ETFs can be a great trading vehicle. They can also be a great way to lose a lot of money very quickly. So it just depends on really what type of trader you are, how much experience you have, and more so than experience, I would say how much time do you have to really, manage your positions? Because if you have more time, then I'd say, yeah, you can dabble some more in leveraged ETFs. If you're not looking at your portfolio, you're not looking at your trading screens all the time, I wouldn't touch the leveraged ETFs. You can lose money so quickly in these. Or like options. Any leveraged trading strategy, whether you're talking about options, whether you're talking about... I mean, look, think about it this way. The majority of people who try to make money trading in the stock market do not. People that invest and hold over time tend to make money. People who try to day trade for profit tend to not. And when I say that, I'm simply talking about buying and selling common shares. People will trade differently. People will start their trading journey differently. But just if you're looking at people who are buying and selling common shares of stocks, most people lose money doing that. So now if you incorporate leverage trading into that, meaning that if you're, buying $100 of something and instead of it going down 10% and you lose $10, it goes down 10%, you lose $30, 3 times that, that's going to exacerbate those losses. So if every day trader out there, every person trying to day trade out there starts doing leveraged ETFs instead of just common shares, on average, you're going to lose more money. So it takes, I would say an experienced trader. It takes someone who has time to be able to do it, to be able to monitor those leveraged positions. And it's the same thing with options. Like Shelly said, how do you not have $50 for Costco, but you've got, well, I don't have that much money to go on options. But that's why I don't have my Costco membership. I lost it all on options. But yeah, I mean, manage your risk, like Shelly's saying. Chanos lost shorting Tesla, 27 million. I'm an option trader. I've traded calls and puts on Tesla. I've made a lot of money on calls. I've lost a lot of money on calls. I've made a lot of money on puts. I've lost a lot of money on puts. I don't know. Someone was asking me in the chat yesterday. Like, I think they thought it was like a big got me moment. Like, do you regret selling your Tesla? Like, of course. Like, there are stocks I regret buying because they went down. There are stocks I regret selling because they went up. Like, that's going to be a part of trading. That's going to be a part of investing. And part of me doesn't honestly even really regret selling the Tesla because it was kind of stressing me out. I was like, I don't know what's going to happen with this stock. And now I'm not stressed about it. And I'm not very convicted that, you know what, Nicholas Brown? You're a smart kid. That's a good idea. Why don't we do that? I'll hit up Gav from Wolf Financial because they're probably already scheduled a space at that time. And I don't want to step on their toes. And maybe if we have 2 different spaces at the same time, it won't be the best thing going on anyway. But you can never call a direction. Yeah, I did. Yeah, I agree with Kelly. Or not Kelly, Shelly. I think you can. That's basically what all the traders are doing, calling directions, right? All right. I want to get into we're gonna talk about, and as always, keep dropping different trade ideas or different stocks in the chat. I can pull them up. We can talk about cryptos. We can talk about whatever. But I'm just gonna talk about some things that I saw on Twitter that I thought were interesting. Kind of a new segment. I don't really have a segment name for this yet. But basically, like, I want to say, like, maybe we'll do like FinTwit thread of the day. And maybe it's not like the best thread or most informative one out there. Maybe it's just one that like caught my interest or one that I, have thoughts on. And this is actually, I don't want to like come off as, wait, sorry. I want to make sure Just Drusen, who was asking about the leveraged ETFs, knows again that we're going to be bringing on Dave Mazza, who's basically like the best guy to talk to when it comes to this stuff, in a few minutes here. I also am not really familiar with Bull Z, so I'll have to look into the fund to see its holdings, and I'll show you how I would do that pretty quickly too. I was gonna say this. I don't like. Maybe it's an aspect of social media. Maybe it's just like human nature in general. But like I don't get the idea of like not being able to be critical of people you're like friendly with or you're fans of. Like we made a TikTok the other day blasting Pardon My Take, which is Barstool's biggest podcast, because Pardon My Take did a ghost kitchen thing called Pardon My Cheesesteak. People were posting pictures on Twitter and Reddit, looked terrible. And I was getting comments on the TikTok saying about how like Barstool hater this, Barstool hater that. I was like, the only reason I know about this is because I listened to the podcast. Like I listen to the podcast I every Monday, Wednesday, Friday when it comes out. It's the only thing I listen to from Barstool, really, granted. But like I'm fans of Big Cat and PFT, the host of the show. Does that mean I can't call them out because they had either a shitty idea or B, shitty execution on this Pardon My Cheesesteak? Like why does that mean I can't call them out on that? Like they're not my friends. Like they're not, you know what I'm saying? Like so all these people were like, oh, like you're just a hater, like all this shit. It's actually like no, like it's the opposite. I like them. And this is kind of similar where like I like this account, High Yield Harry. I actually think it might be affiliated with Liquidity. I think definitely with Bullish Studios, who we're friendly with, who we had on the show a few weeks ago. But basically, so I saw this thread, and this was really funny. So, and we'll talk about this for a second too. So, Kirsten Semena, I don't really know. Kirsten Semena, the senator from Arizona. She's a Democrat, but she's gotten in a lot of hot water from people on the left because she's basically kind of gone against, sided with Manchin on certain things before he flipped, and basically like siding with Republicans on things. And people are like, what are you doing? Like your base of the people who elected you, like aren't the Republicans. So basically in the Inflation Reduction Act, there was a part to take out this carried interest tax loophole. It's pretty complicated, but from what I understand, and maybe we have some tax experts or some PE associates or someone in the chat, mainly applies to hedge funds and bankers, mainly like partners, people older there that are managing these investments into companies. And then they get to take some of those investments into those companies down the road as carried interest, and then it doesn't get taxed as regular income. So basically, think like, all right, if you're a partner at a PE firm and you invest in 2018 into Hydro Flask, and then 4 years later, the Hydro Flask sells out, you get paid from that 2018 investment $100 million. Instead of that getting taxed as income, it gets taxed as capital gains. So it's kind of like a tax loophole for private equity and hedge fund managers. And that's why, so Sam here, who I actually follow Sam on Twitter, I think he's a good follow. You can see I'm on the Benzinga account right now, but followed by Aaron Bree, Joe Wiesenthal, and Jason Kalkanis. He's like a transit guy. But he posted this picture from Liquidity. Liquidity posted the picture initially on their Instagram story saying, laughing, basically saying, people in New York, I almost just did what High Yield Harry got mad. I was going to say investment bankers in New York getting bottle service for Kirsten, saying Kirsten is bae, she helped us out. Like they're celebrating her. And it's kind of a punch in the face. I think Sam is pointing this out to a lot of Cinema's base. Think about whether it's Democrat, whether it's, teachers, firefighter, whatever, saying like, oh my God, like I voted for this lady and now she's going out of her way to help people in private equity. And I don't know. I'm not trying to get into politics, but you'd imagine that something like this is typically something more, popular among the Republican base, among conservatives, saying, okay, yeah, let's do laissez-faire, let's take government out of it, less taxes, support private equity. So it's basically like Sam's point in this is she's going against her base, trying to maybe pick up some political points with the Republicans. But Sam says finance bros are literally getting bottle service dedicated to Kirsten Semena. Just wild that she cares more about helping millionaire bankers pay less taxes than helping everyday Arizonans. And I actually agree with Sam's sentiment here. I also like don't care. Like I think it's funny liquidity, like poking fun at it, whatever. But high yield Harry comes in here and like I don't think, I don't know, the more you know gif, like I'm not thinking maybe this is condescending or not. I think Sam's reply to this is certainly a little bit condescending. But high yield Harry's like problem with Sam's tweet is he's saying bankers don't have carried interest, by the way. It's more of a private equity, hedge fund, and real estate thing. And here's the thing is Sam is not really, he's like finance Twitter adjacent, right? He's not in the weeds on, investment banking, private equity, hedge funds, public markets. He's talking like, I'll go to Sam's profile for a second. Like he's talking about transit and cities and stuff. And so to Sam's point, I think his point in the tweet is conveyed decently, right? Like, hey, she's helping millionaire bankers, not everyday Arizonans who may or may not have voted for her. High yield Harry comes in with this tweet here. Bankers don't have carried interest, by the way. It's more of a private equity, hedge fund, and real estate thing. And here's the thing is like, I didn't really think this was a problem. Sam came in again. I do think this reply is slightly condescending. Sam, I am keenly aware of that, high yield Harry, but normal people refer to private equity, venture capital, and hedge fund general partners as bankers. And then people are getting on him for saying like normal people, like he's saying like poor people, or like whatever. He's saying no, they don't. Like what? And I just like who cares? Like we're talking about saying bankers instead of private equity associates. Like if I'm talking to my mom, like she's not going to know what the difference of that. Like that point to her, like she'll understand Sam's point, saying, "Hey, yeah, Kristen Semena is doing this favor to Wall Street." So basically, high yields Harry's whole point is instead of generalizing by saying bankers, he should have said Wall Street or private equity associates. And it's like, who really cares? You know, like if I were, I probably maybe would have said the same thing. Like, oh yeah, bankers are benefiting from this. Even though if you asked me and I knew about it, like, hey, bankers aren't really the ones significantly benefiting from this. It's more private equity associates and hedge fund partners. It's like, who gives a shit? And then I think people trying to pile on him for saying normal people as if he's trying to say like poor people or anything. Like, no, I think that's also fair and true. Like most people outside of finance who aren't in on, who aren't in on the weeds in this stuff don't think of a private equity manager and an investment banker any differently. And most of these guys in private equity and hedge fund partners are former investment bankers anyway. So like I was just like, who really, like, is this what FinTwit is boiling down to? Arguing over, saying private equity associate versus investment banker. Like the point still stands. Like I think so, and I think it almost felt to me reading the replies like people on the FinTwit side were being like, oh, this guy is dumb. He doesn't know, the different job titles in finance, and it's like do you guys talk to people outside of finance? Because most of them don't. Like if I'm talking to a random person at a bar on a Saturday, I don't expect them to know the difference between a PE associate, a hedge fund partner, and an investment banker. And just say, oh yeah, they're a banker or they work on Wall Street. And then you'll know they're a finance guy. You probably won't know or care what they do. So that was my FinTwit thread of the day. Just some silly beef that I don't really understand. Curious y'all's thoughts on it. Maybe if I were into that side of finance, like maybe if I were a private equity associate, I wouldn't like being mislabeled a private equity associate or a mislabeled investment banker, but I just don't think it's a big deal. All right, let's go back to Benzinga Pro, see what's moving out there, see if we've got any big headlines moving the market. I really do think this is one of those days that might just continue to be a little bit slower as we get ready for that CPI print tomorrow, just because it's like any time you have a big news catalyst that everyone knows is coming, because those are basically the two different types of news catalysts in the markets. You have surprise catalysts like NVIDIA yesterday coming out and giving their pre guidance, basically saying, hey, we fucked up. Not we fucked up, but hey, like our quarter's not going to be good. Basically coming out and saying earlier than that. That's an unforeseen kind of surprise catalyst. But something like the CPI tomorrow, that's an anticipated catalyst, right? Everyone's looking forward to it. Same thing with earnings reports. And a lot of times with these anticipated catalysts, you'll see a slowdown in volume because people don't want to call direction. It's hard to say, okay, is the market going to go up or down tomorrow on the CPI print? A, you don't know the CPI print. Could be higher than the expectation, could be lower than the expectation. B, you don't know the reaction to it. I mean, take into account the Friday's job numbers, right? On Thursday night or on Thursday afternoon while the market was still open, you could have tried to guess if the job report was going to be good or bad. And then you got to try to decide, all right, is this going to be seen as positive or negative? So tomorrow with CPI, I think it's pretty fair to say that if the number is significantly lower than 8.7, I would probably describe that as maybe I'll say significant, 0.5% lower than expected. So if it's 8.7, 8.2 percent. So 8.2, I think if we see something like that, 8.2 or lower, you will see the markets absolutely ripping, maybe even like 8.3. I think if it comes in line with expectations or even slightly below it, you won't really see the super positive reaction that some bulls out there trying to play it might be anticipating, just because, again, that expectation is that we're going to see the CPI number come down month over month. So it's one of those things where, a couple months ago when inflation was maybe at its worst, the expectations were already so low, the bar was set so low that there was maybe more alpha in play on the bullish side. Now, I don't know if that's the case because a lot of people out there are already expecting the markets to move higher off the CPI print tomorrow. Catching up on the chat here. If anyone's got any stocks they want to check out, please drop them in the chat now or forever hold your peace. Here in a few minutes, we will have Dave Mazza, the head of product from Direction, hopping on. I have a feeling we'll probably talk some semiconductors today. I see some people asking about NVIDIA. Some semis, obviously, with the chip bill coming into signed. I think President Biden signing it. But it's going to take some time for NVIDIA or for any of these companies to really see any of the benefits from that bill, right? You get the news catalyst that the bill's being passed. That helps out the stocks a little bit. You get this jump. But really these catalysts are years away. I think, I think, and I said this yesterday because someone in the chat was asking, NVIDIA's down 8%. Should I buy the dip? Let me go back to the daily candles. I said I wouldn't be surprised to see this thing continue moving lower in the short term. What was it? So I said I wouldn't be surprised if we see this thing continue moving lower in the short term. NVIDIA, again, came out yesterday, basically said, hey, our gaming revenue is going to be lower than expected. And then you also have to understand that in especially during COVID, a lot of NVIDIA's demand came from crypto miners. You're not seeing as much demand from crypto miners right now as the price of Bitcoin and different, Ethereum are moving lower. So if you've already got, gaming demand, you've got NVIDIA coming out saying gaming demand is going to be lower. Crypto demand is going to be lower. I don't see any positive catalysts coming for NVIDIA in the next couple, in the next quarter or so. It could take a couple quarters before they start saying, oh yeah, how we said gaming's slowing down? Oh, it's starting to pick back up again. Now we're beating expectations again and things are back on roll. With that said, it might not matter if NVIDIA has any positive catalysts or not, right? If the markets, specifically the Qs, remain strong and people are buying tech, people are buying growth, NVIDIA stock's going to go up. It might literally not matter at all if NVIDIA has positive or any positive or negative catalysts coming up. And that's why this is so hard. Like, sorry, I'm going to butcher the name, Len Dung in the chat, saying long or short. I don't know if they're talking about NVIDIA, but like, you can be exactly right on the direction of, NVIDIA's company and the internal things, going on and their demand for crypto and their demand for gaming. But if the macro environment saying, hey, we don't care, growth has been down, 20%, let's keep buying growth, NVIDIA will go up anyway. People won't care that there are some negative headlines out there. So I wish I could sit up here and tell you, oh yeah, guys, this is going to Or sorry, I'm looking at the Qs right now. I wish I could tell you on Nvidia, oh yeah, this is going to 130 and then it's going to come back up. I'm going to short it here and then buy it down here. I have no clue. I have literally no idea. I can take the information that I do have and help that make my investment decisions, which right now I'll be completely transparent with you. And that's what I was saying, Jay Rice. You have those sell the news events where, great, we passed the bill. That's a huge positive catalyst for the stock. What's it mean for the actual company right now? Nothing. It's going to mean something for the stock for a day or two, and then people are going to realize, oh, hey, these millions and millions of dollars going into the bill for these companies, it's not going to happen overnight, right? NVIDIA is not going to be able to build its new factory because of the chips bill tomorrow and get that production. When do you think that's going to be, priced into the company's earnings and profit years and years and years down the road? They'll give some guidance on it. Oh yeah, the factory's coming along. We're expecting to be full production next year, and the stock might get a little bounce. But a lot of those times, those are sell the news events. But I was going to say, I'll be completely transparent. Like I said, I have no clue what NVIDIA is doing. I sold some of my shares that are in my long-term a while ago. I mentioned that yesterday. I'll be scooping this up under 150 in the 140s and the 130s for sure. Long-term, no problem with that. I have no problem with buying some NVIDIA down here. Even if we don't even get back to these lows that we tested. David Green was on earlier. He looked at the monthly chart, said 126 was our next chart, next level on the chart. And if we broke through that, go all the way back down to like 60 or something. But like David said, we're gonna have a lot more problems if NVIDIA gets back to its pre-COVID levels than worrying about NVIDIA's stock price. That's how I'm, that's what I'm doing with NVIDIA right now. I'm just chilling. I see in the chat Zen Bullish talking about Walmart, Disney, Paramount. Disney reports on Wednesday, guys. Tomorrow after the close. I mean, sheesh. Oh, man, I didn't realize how much lower we were on Disney than pre-COVID. Pre-COVID, 145. Dipped down to $80. It's so funny because I remember this during the COVID crash, and Disney, I don't know why, but was one of the main stocks that I looked back at up here and was like, oh, like that was such an easy buy down here at $80. Like Disney wasn't going anywhere. Disney wasn't going, Disney's going to be fine. Like I had a generational opportunity to buy Disney at $80, which it did drop a lot. I mean, from 145 to 70, I don't know what the lows were, 79. That's almost a 50% drop. I think that's a lot more than the actual market dropped. I think the S&P dropped about like 30%. So 50% to 30% is a lot more, which makes sense because at the time Disney Plus wasn't established and the parks were a big part of, and are a big part of Disney's revenue. So obviously with COVID coming down. But then looking at the chart now, we were basically back there. I mean, not really. We got down to 79, like I said, but we got down to 89 just a few weeks on August or in July. And I wasn't looking at Disney then thinking this is a generational opportunity. So I think that's where you have one of those things where the price action really drives sentiment. And while this thing was so ugly, Disney, especially right here from March to July, just a straight line down for 4 straight months. It's I'm not going to try to hop in here and buy a stock that's just going down for 4 straight months. Even though it got down to that price, when I was up here, I would have been like, oh, I'm so stupid for not buying Disney at $90. So I don't know. Maybe it's still in that price zone where it's still in that price zone where in a year I'll be like, oh my God, I could have bought Disney at 107. So, I mean, Disney, look, I don't want to sound like a broken record, but what's your time frame? If you're buying it for the long term, buy some Disney at 107 and hold it till 2050. And I promise you the share price will be higher than it is today. If you're looking for a swing trade, I don't know. They report earnings tomorrow. I don't know how the earnings are going to be. Also, this is not investment advice, and I can't actually promise that the share price of Disney would be higher in 2050 than it is today. But I would be willing to bet a lot of money on it if anyone wants to. I don't know if I'll be alive to collect, but I'll bet the money. Walmart and streaming talks. I saw Apple is trying to get the rights for Big Ten football. I don't know how impactful this is for the business, but I do think it's really interesting looking at the different kind of content giants right now. You're looking at Apple, you're looking at Amazon. Basically, all of them are trying to make some investment into live sports, which raises me the question, all right, when is Netflix going to do that, right? How can Netflix sit here as a $112 billion company, see Apple go out and acquire, rights to MLB games, see Amazon Prime go out and get Thursday night football games, Amazon Prime going out and trying to get Big Ten football games. How can Netflix see all this and say, hey, we're getting lapped by a company that ships books to my door, and we're getting lapped by a company that makes my iPhone, and we're the streaming service, we're the content place, we're the place people are supposed to be going to for entertainment, and we're letting these other companies that basically, right, you think about Amazon Prime Video, you think about Apple TV Plus or whatever, basically came in after trying to model after Netflix's platform, saying, oh, hey, look at this Netflix streaming platform. That's pretty cool. Hey, do you think we could do something like that? Yeah, sure. We're Amazon. We have a lot of money. All right, great. We're going to produce our own original content, build our little web page for Amazon Prime Video. Great. Now we have a Netflix competitor. Hey, we can actually surpass Netflix if we start including some live sports. How are you going to let that happen if you're Netflix, right? Like, I get it. You're focused, you've got to focus on Stranger Things. You've got to focus on next season of Ozark, maybe. I don't know. But it seems like to me, Netflix is letting other companies come in and take some of their market share with offering live sports. I'd be absolutely shocked if in the next year, Netflix, let's be real. Netflix, they've talked about sports before. They're probably already working on it. Maybe they're getting ready to announce something in the next couple of weeks. I have no clue. But I'd be shocked if in the next year or so we don't hear about, Netflix making some sort of big investment into the sports world. And I do see our next guest hanging out backstage, Dave Mazza, head of product from Direction. So, I saw some people in the chat asking about leveraged ETFs earlier. I said, hey, I could talk about them, but why don't we wait for when David comes on? I will say the last thing on the Netflix sports thing, you might think like, okay, Aaron, I get it. You're into sports, so you care about it. Why should we as an investors? There's a reason, right? Amazon and Apple and whatnot, and some of these companies are willing to pay so many millions and millions of dollars for the rights to these or for the licensing to sporting events. It's not just because people like sports or because they want more guys watching their platform. It's because sports in today's world are one of the only things that people will watch live, right? It's like sports and presidential debates. And those advertising slots in the time in the shows, live sports that people are watching live are so much more valuable than buying time slots on a rerun of Seinfeld or whatever that someone's probably not watching that on TV anyway, or if they are, maybe it's recorded and they can skip the commercial. So having a live audience is very, very valuable for advertisers, and sports are the best way to get that right now. So that's why you see Amazon, Apple, and whatnot investing all this in live sports, Fubo exactly, instead of in other areas. And so I don't know. I just am shocked that Netflix has been letting that happen. But again, wouldn't be surprised to see that coming soon. Alrighty, let's go ahead and bring on our next guest, Mr. Dave Mazza, head of product from Direction. Let's go ahead and give him our very special intro. Bring him back on the show. Mr. Dave, how's it going?
It's going well. Good to be back.
Yeah, good to get you back on the show. It's been a few weeks. I don't know what's been on the top of mind for you in the past 2 weeks. I don't know if you have any specific funds or anything you'd like to discuss. I was going to say we've obviously gotten a lot of news in the semi space in the past couple of weeks since the last time you've been on.
Yeah, no, it's certainly right. It's been a pretty rocky road for a lot of semi names. Most recently with Nvidia's earnings and some negative guidance coming out of many companies. That's really, I think we saw a pull forward of demand in 2020 into 2021, and then now really a reassessment of what that looks like from their growth perspective. But all through that, we've continued to see SOXL and SOXS trade extremely well, and really allowing active traders to play out both sides of their view, whether that's bullish or bearish.
Yeah, and I was talking about this yesterday on the Nvidia news, and like I'm just gonna draw a line right here. Oh, you can't really see this, so how can I make it thicker? Basically, my point was just that like if gaming, because this is what Nvidia was basically talking a lot about yesterday, was their gaming demand and gaming revenue. If the growth of gaming looks like a linear chart going up, right, like a nice 45-degree angle, 1-to-1, during COVID, that, like you said, that growth got pulled forward. The growth of gaming and the demand for gaming shot straight up from that line. So to revert back to that, like gaming's still growing. So that's why I'm not worried about Nvidia long term. Like there's still going to be growing gaming demand. But what you're seeing right now is that the pace of that growth is maybe slowing after that headwind from COVID, and you're seeing the stock get hit from it, but that's the cyclical nature. And then maybe in a couple quarters, they say, hey, how we lowered guidance for gaming? Now we're ready to raise it again. Like people are gaming more now or whatever it is. So it's just kind of one of those cyclical sentiment things to me.
Yeah, well, I think we forgot that semiconductors are an extremely cyclical industry. They always were historically, but since what COVID did was really expose the utility of semiconductors, and it sounds kind of funny because they've existed for decades, but just how important they are to everything from gaming, cryptocurrency mining, to EV and AVs on the road, or just what's happening in our smart appliances. So all of that was a real benefit, but to your point, the space remains extremely cyclical from a demand perspective. And now we have some question marks from a geopolitical standpoint of issues with China and Taiwan that could be played out really negatively. But at the end of the day, that we may just be seeing a reevaluation of what people are willing to pay from an earnings or sales perspective for that revenue, which is still growing, just at a lower pace.
Yeah. So what about outside of the semi space? Anything interesting? Any funds been sticking out to you?
Yeah, well, I think it's worth noting that actually just today we've launched 4 funds, and these are bull and bear ETFs on individual stocks. So actually on Tesla and Apple. So for example, TSLL is a 1.5 times bull fund. So on a daily basis of the common stock of Tesla. So TSLA. This just launched today. Volumes have been pretty strong as people are looking to play obviously today's downturn in Tesla. I would emphasize these are tools again for active traders. If you don't have the ability or interest to make buy or sell or hold decisions frequently on a daily basis, they may not be for you. But if Tesla is part of your toolkit from trading and you're looking to amplify a bullish viewpoint and you have the ability to monitor, TSLL could be that for you, so you can express so with conviction or without having to use margin to amplify that exposure.
Yeah. I learned I was listening to a podcast yesterday about this guy who was under investigation for SEC, and basically what he was doing in like the 80s or 90s, and he said this was pretty common practice back then, was when he was like a trader for certain stocks or whatever, they would falsely advertise how many shares were being traded to then get more interest into the stock. And I guess he said that was common practice. So if you're looking for a trick, I don't know, maybe try that. Say 1 million shares were traded today.
Yeah, I'm not sure about that from either a regulatory standpoint or from an actual standpoint. But what I've said before, which is really relevant, is there's kind of 3 things that I like to keep my eye on when thinking about trading leverage and inverse ETFs, outside of any process that we may have, whether it's technicals or fundamental, is do you obviously got to pay attention to the performance, right? Do you believe that we're going to see an up or down day, right? Because that's obviously going to change your opinion of a bull or bear. But also, what's the underlying volatility? And then what is the volume? In particular, are we seeing changes in either of those? So it tends to be a bullish indicator if we're seeing, up volume on and up tape as volatility comes down, which is positive for you if you're bullish here. But conversely, the negative can be the case. So if you're seeing, volume increase on down days and performance is not your friend here, then a bearish tilt, again, above and beyond what you may already be doing from your own analysis, could be interesting to take a look at.
Yeah, and obviously I was kidding around with that. You probably didn't think it was as funny as I did, but I do know they cracked down on that. I guess it was like common practice. I'm just saying, oh yeah, this stock Duke Energy traded 15 million shares, and they go back and look at the tape and find out, oh, it actually only traded 5 million. But so I want to talk about this for a second. So with the Tesla with TSLL, which one was the bearish one again?
TSLS.
TSLS. So I know a couple weeks ago, we saw that TSLQ fund open. I don't know who did it, but this is different because this is leveraged, correct?
Yeah. So we have the 1.5 times Tesla bull. So that's TSLL. The TSLS is 1 times inverse on the bear side. So if Tesla's up 2%, for example, TSLS would be down. But TSLL would be up on a daily basis again, 3%.
Why was that decision to go 1.5 leverage on the bullish side and no leverage on the inverse side?
Well, I think there's different use cases, right? So if I'm looking for a hedge of exposure, that's an inverse 1x makes sense. We have filings for additional further leverage on the bear side as well, but at the beginning we saw a utility for hedging tools. We know the price of trading Tesla options can be very, very volatile. When I talk to some traders, they say, well, what do you mean I get filled appropriately? Well, sometimes take a look at what you actually may be paying there from a spread perspective. So the ability to go long with an ETF, to short, to hedge your position, or to take an outright negative view can be very powerful for active traders.
Well, I'm seeing people are getting excited about this in the chat. OMG, this is incredible. Is it the same thing with Apple where the bullish side is leveraged, the inverse side is not?
Correct. So so we get AAPU, which is 1.5 times daily bull, and then AAPD, which is just that 1 times inverse of Apple.
I'd love to see what a chart of if the what was that, the bullish one, AAPU?
Yes.
I would love to see that chart if that had been in existence like for Apple's run, because Apple's stock chart already is like the most insane. I mean, there are a lot of insane stock charts over time, but like imagine if this was 1.5 leverage, right? You could have bought like $5 of Apple back here in 2000 and been a millionaire by now, probably, with that sort of leverage.
Well, this is not it's not a recommendation, but I used to work with another trader who would say Apple's the ultimate buy the dip company. That may not continue to always be the case, but certainly we've seen examples of that time and time again, whether it was in its history 10 years ago or most recently. It kind of goes through these periods of really strong outperformance and then generally doesn't really underperform the market too great. But these, the one thing I will emphasize, AAPU and TSLL, these are daily investment tools, so you really have to trade them. If you have the ability and your viewpoint to monitor them and you want to continue to own it on the next day, that may be fine, but you do have to be monitoring and watching these positions highly frequently.
AAPD, D as in dog, is the ticker for the bearish Apple. Sawyer's asking in the chat. And yeah, Dave, I emphasized that same point earlier when someone asked about leveraged ETFs. It's like, hey, look, if you're trading really actively and you have time to manage your positions and you're in and out in the same day, great. If you're looking for things to just buy and hold, whether it's for a couple of weeks or months or years, leveraged ETFs, probably not the best idea.
Correct.
All right, Dave. Well, unfortunately, are running out of time here. 12:56. Only got a few minutes left on the show, so I want to turn it over to you if you've got anything else for us this week. If not, we'll pick it up next week.
No, let's pick it up next week. Nothing else. Yeah, so keep an eye on the TSLL, particularly if you want to express that bullish daily viewpoint, or TSLS to hedge your Tesla positions. But yeah, look forward to talking more about these next week and anything else as earnings season kind of wraps up here.
Beautiful, man. All right, Dave. Well, have a great weekend. Looking forward to bringing you on next week.
Thank you. We'll talk soon.
I don't know if I just say weekend. I meant rest of your week, or weekend
Well,
if you're.
I guess we could say that. I mean, if you're telling us we're good, I guess we're good.
All right, we're good. It's Friday. We're not doing CPI tomorrow.
Exactly.
Any of that. We're canceling it.
Don't worry about it.
All right, Dave. Have a good one.
Cool. We'll talk soon.
Bye. All right, guys. Dave Mazza from Direction. Go ahead and check out some of those new ETFs. You've got AAPD, your bearish Apple fund that just tracks it 1-to-1. Your AAPU, your leveraged 1.5 Apple fund on the bullish side. Your TSLL. Man, I was going to try to do this off memory. Now I'm getting confused by the tickers. TSLL. Say that's the bearish one. Right? I don't know. Let's go back. Let's figure it out. I obviously can't go off this memory. TSLS. TSLS is your bearish one, I believe. Yeah, because it's green. So what was the bullish? I think it's TSLL. TSLL is your bullish one. TSLL getting you 1.5. Thanks, guys. Sorry, my memory is not great. All right, guys, we do have a video we're getting ready to pull up and play right now. Let's go ahead and do that pretty quickly. And then after, Money Mitch will be starting. Let me go ahead and let him know real quick.
Ready?
Yep, let's do it.
Welcome, Anne-Marie Band, CEO of TheTradingBook.com, joining us here on the air at Benzinga every Friday or two to talk about the state of the markets, current plays in the market, and how it's affecting traders and investors. Thank you, as always, for being with us. How are you?
It's my pleasure. I'm great. It's great to be back again.
Always great to have you here. We have, as always, a lot to discuss and a lot of things that you're going to give us insights on, and we always enjoy having you here. Let's go ahead and dive right into what we've got in the recent news. We want to get traders on the right side of what's happening out there. So we're going to get started by discussing ISM and JOLTS and the latest NFP numbers that we just got as well. We saw weak ISM data. We saw the JOLTS data in July and the non-farm payrolls this morning. What should we be taking away from this? Can we talk a little bit about some of the articles that we have to bring up here and show on display, and what are we taking away from these reports?
You know, that's really a great question. And what we really are looking at is a snapshot of the market from
Introducing
different
SpeechAlarm,
things that are
the most natural sounding text-to-speech
measured
software on the
across
market.
different
Hey,
landscapes. We
I'm
have
Joey, and
what our
I'm one of the 30 AI
manufacturers
voices
do.
from
We have
SpeechAlarm.
our
If you
job
listened to this video
openings
until
and
now, and you probably
labor
couldn't tell
force
I'm not a real
working.
human
That's
voice.
our JOLTS and our
That's because
ISM.
I
And
understand
then we
exactly
had
what each
non-farm
phrase is saying,
payrolls
and I know
today.
how to put inflections
And
in my voice,
non-farm
just like a
payrolls
real human would
surprised
do.
dramatically
I was coded in that way that my
because
neural
the
linguistic
ISM and
engine will
JOLTS
analyze
numbers
the
were bad.
phrases, and I'll
And
understand when
so
I'm enumerating
this sort
something,
of
when I have to emphasize a word,
cross-current of
or I need to take a
everything
deep breath.
really makes
But you don't
us
have to worry about
be a
any
little
of
bit
these
more
things.
patient in
With
terms of
SpeechAlarm,
what
you
we
can
look
generate as
at
many
in the market.
voiceovers as you
So
want with only
whenever
3
you're
clicks.
staring down the market
Yes,
with all those sorts
you
of
heard me
things,
right.
just
Only 3
realize
clicks.
that you have
Click
to
number
think
1.
through before you
Just
put
paste the
your one
text you
door.
want to be transformed
Absolutely,
into
it's really
speech
good advice.
in our
I love
online
that.
text editor.
And when we have
Click number
cross currents that
2.
suggest
Choose
employment
the
number
language
stability
and
from
voice
the
that you want
non-farm
to use.
payrolls, but drifting
We offer
downward
male,
numbers
female,
like
and even
the
kid
ISM and the
voices.
JOLTS like we just
And
saw.
finally, click
I
number
would
3.
suggest that we have some tough decisions
Click on
to make,
generate,
right?
and in
where should we
5
be
seconds your
looking to position
voiceover
in the
is ready
market
to be
when we have
downloaded.
data like this coming out?
How cool is that?
Well,
And
you
you
know,
didn't
my
have to pay a
favorite thing
single
to
cent.
do is to
And
look
didn't
at
have to
all
wait
the
a week to
pieces
receive
that
this
we
voiceover.
have. And
We
one
offer
of the
voices
things
that are
that
perfect
I
for training
like
videos,
for us
voices that
to
are
look
perfect
at
for
is
presentation videos, and voices that
the
sound
number
like
one
Hollywood movie
event
trailers,
of
and even kid
making
voices that sound
decisions,
joyful
and those
innocent.
decisions should
All our
make sense
voices
to
have
us.
elements
And
that make a
so
voice sound good, and
what
include
I
all the
like
voice
to think
expressions
about
needed
is
to
what we
make people
can
more
do as
engaged in the
traders
content
is
and
really
make it sound
build
professional.
that decision-making
Actually,
power
98%
instead
of the
of
people hearing a
chasing
voiceover
that
generated
FOMO
with
sort of
SpeechAlarm
thing,
can't tell it's not a real
everybody
human
chasing
voice.
around X, Y,
This
or Z
video
and
is
not
created with a
knowing
voice
where
from
everything is
SpeechAlarm, and you
going.
are still
So
here
with the
watching and
weakening
listening to what I
numbers
have
and
to
all
say.
of that,
That proves my point.
and knowing
So
that
here
we
is the
have
deal.
this
For a
FOMO
limited
event
time,
coming,
you're getting the
what
deal
we
of a
want to
lifetime.
do is
Normally, we will
position
sell
carefully.
SpeechAlarm as a
Sorry
monthly
about the
recurring
thunder.
service.
It's
But
Florida.
today,
It's
because you are in
crazy.
the first 1,000 people to join, you
Yeah,
get the
we're going to
special
have to
founders
position.
offer.
And so
You can
looking
get
ahead,
SpeechAlarm
that's
for a
really what I
ridiculously low
want to do.
one-time fee and no
Position
monthly
us
recurrence.
correctly and
The price
give
you
us
see on this
that
page is the
action
lowest
event
it'll
that
ever
we
be.
need in the
In fact,
market.
the price
Got it.
increases
And when
with
you're
each
talking
minute
about that, right,
passes.
I'm almost hearing a little bit
If you
of
want to
a
lock in the price,
cautionary tone
don't
in your
refresh
voice,
the
right?
page.
How should
Don't
traders
bookmark
balance
it
that
for later.
uncertainty?
Just
What
go
would you
ahead
say
and
to
click
that?
the buy now
You know what?
button
We're
below
going to
right now.
manage risk.
Once the launch
That's going to
ends,
be the
the price
most
shoots way
important
up.
thing. You're going to look
But
at something and
honestly,
you're going to go,
even at
oh my
$500,
gosh, I want
that's
to
an
go long
incredible
there. Oh
deal
my
for the
gosh,
power you're
I
being
want to go
granted.
short there.
You will make that amount
Before you
back in
pull
no
the
time.
trigger, you're going to have to
Outsourcing
say
the
to
creation
yourself,
of a single
what
voiceover will
do
cost
I
you
want
more
to
than the
see?
price of
And
this
so
offer.
for me,
And you will have to
thinking of
wait after
things
the
in a
freelancers.
sensible
Not to
approach,
mention that
if
you
we
just
look
don't
at
like the end
weak
result.
ISM,
And you will waste hundreds of
which is
dollars in vain.
manufacturing,
I'm
and we look
100%
at
confident that you
job
will love
openings
Speechalo.
really
In
dipping
fact, I'm so
more than
confident
2.5
that I'm going to
million
make this a
less
complete
jobs
risk-free decision for you.
year over year
If you create a
at this
voiceover
particular
using
time of
Speechalo
year.
and you don't like
And
it,
so
I
that
will refund all your money and
that
let you keep the
movement
voiceover
makes
that
me
you
go,
created.
all right,
So,
because
now
the
that you have
markets
no
are
risk,
likely
you
to
also
have
have no
raising
excuses.
interest rates,
Go
the
ahead
thing
and
that's
click
going
the
to
buy
get
now
hurt
button
is the
below.
housing
Profit from the
complex.
one-time
And so
payment
what I
offer
want to
and
look
the
at
huge
is
discount
that
that we have for the first
ETF,
1,000
the
users.
XHB.
Let's
And
quickly
what I want to
recap why you
position
should get
is a
Speechalo
short
today.
there. So if
You'll
you
be
bring
able
up
to
that chart
transform any
and we
text into
look
speech.
at the XHB,
You'll get over 30 human-sounding
what it
voices.
really is
You'll
telling
be able
us
to create
is
voiceovers
that
in over 23
we have
languages. And
price
you'll be able
action
to
that
create
is
as many
dipping
as over
lower,
30 human-sounding
and it's
voices.
got support and resistance. And you can see from those lines up above us, we've got clear resistance, down below, clear support. And this is a weekly chart. So what this means is we're going to be able to have time to position into this trade. Right now, it's going to move up into that 65 area. I'm giving us about $1 of risk. And once it gets into that 65 area, we'll be able to position the short, and no way.
Got it. Okay, and so as we're looking at this position in the XHB, what if there's traders, or what if some of us are uncomfortable shorting the markets, right? Is there somewhere that when you're looking at this trade, you can go that's showing upward trends where traders can participate, not just the short side and some of the positions we're looking at with the XHB?
Well, let's flip around and think about, well, what are the things that we can't do without? And we can't do without energy. I don't know if you just noticed this, but all the power, everything went completely dark on this side of the screen because I lost everything. Power, the whole works. But we're back because I have a UPC. But in any case, in the adventure here today, that's just what we're looking at. Energy. We can't do anything without it. And so what I'd like for us to look at is a long in energy using the XLE. Now, right now, energy is really pulling back. So it's giving us a shot to get in at some really pretty prices. And if you look up at the chart again, you'll be able to see that we've got a really pretty motion that'll allow us to get in right around that $70 mark with our risk just a little bit wider than that XHB because it's a little bit volatile, but we've got some nice upside into the future. And we'll be tracking this together as we talk over the weeks. We'll say, hey, how this is going, because these are trades that you'll be able to hang on for a while within the current market trends.
Fantastic. And I'm glad you got your power back there. We actually have some rain approaching the Detroit area right now, so we might be in the same boat with you before too long. But obviously, Anne-Marie, certainly looking forward to the weeks ahead, seeing what's coming next. And always your insights on the Benzinga Pro platform and all the trades we have coming out there as well.
Thanks so much.
Thank you. Anne-Marie Band, CEO of thetradingbook.com. More insights on the markets to come every Friday as she comes in and gives us trades, market ideas, and how traders and investors should be reacting to the news we get. We'll join you next time here with Anne-Marie Band.